Hello everyone, thank you for joining our RHB Bank's podcast. I'm Nova Lui, RHB Bank's Head of Investors Advisory. Together with me today, I have Dr. Suresh, Head of FX and Rate Strategy to share with our investors on our currency view and expectation of rate hikes in Malaysia. Thank you very much for joining me today, Dr. Suresh. Dr. Suresh, Ringgit has depreciated against US dollar by almost 10% year to date as of end of September. Malaysia government, including Ministry of Finance, has been put on spotlight on the weakness of Ringgit against US dollar. Can you share with our investor what contributed to the weakness in Ringgit on top of interest rate differential with US Fed rate?
I believe that there's a confluence of factors here that is driving ringgit weakness itself. Aside of the tightening of monetary policy by the US Fed, there's also the risk that a recessionary risk that's coming about actually in 2023 globally, given the aggressive Fed tightening itself. That seems to be playing out on the minds of a lot of investors. But I wouldn't discount the fact that the interest rate differential with the US Fed has been a very strong factor that has kept not only ringgit on the weak side but also a lot of other major currencies that has also actually come off on the back of the interest rate differential factor.
Prime Minister has recently announced dissolving of the parliament on the 10th of October, paving way for the upcoming election likely to be in early November this year. Since the announcement, ringgit continued to weaken against US dollar. Can you share with our investor, is the election risk plays a part in the recent weakening of ringgit?
I think to a large extent, given that actually the parliament was dissolved on 10th of October, right after the budget was announced, event risks such as this always does play a role itself. But I believe that, the impact will be quite momentarily. It wouldn't have a lasting effect. But, given the fact that the election results are there, risk of a change in government, new policies coming about, those factors always plays a part itself. And that's why, to a large extent, people tend to be a bit more cautious on their investment decisions, especially even on the ringgit as well. This is also taken into account. But I believe that actually the impact will be quite momentarily. Post-elections, then we could see a significant gains in the ringgit as stabilization comes about.
Following the aggressive rate hike cycle in US Fed, Malaysia may need to step up on our rate hike cycle. Based on the latest House view, what is the RHB's forecast on Malaysia terminal interest rate by end of 2023?
Our expectations are the terminal rate for Malaysia on interest rates will be close to 3% by end of 2023. We do expect at least another 25 to 50 basis points, at least in the next 3 months or even the first half of next year. But for expectations for end of the year, it stands at 3%.
Okay, US dollar has also strengthened against other major currencies. In the past 1 month, British pound down by almost 10% against US dollar, while Aussie dollar has also down by as much as 6% against US dollar. In your view, is the weakness of this currency or rather strength of US dollar will continue? For our clients who would like to hold foreign currency, let's say up to 3 years down the road, what are the currencies that investors should consider to accumulate now?
Broadly speaking, the strength of the dollar has been a major factor. But for the UK itself, specifically in the last 1 month, there's been a bit of inconsistency on their fiscal policy and as well as their monetary policy that has exacerbated or even amplified on the sterling weakness itself. So I would say that, aside from the broad-based dollar strength, internal weakness of the UK economy has been a significant driver of the sterling decline as well. For the Aussie, I would say that to a large extent, that's actually due to the interest rate differentials factor with the US and the broad-based dollar strength. Now, for investors, I would say that these are very, very attractive levels to get into sterling as well as Australian dollar because it has actually come off significantly against the US dollar. And I would definitely advocate or even actually suggest that they hold these currencies at these levels now.
Okay, so beside pound and Aussie, is there any other currencies that our investors should consider also?
I would suggest also the euro to large extent. I looked at the chart on euro ringgit, and euro ringgit is actually below a 10-year average at this point in time, similar to the sterling ringgit as well. These are very attractive levels for Malaysian based investors to buy euro and sterling.
Dear investors, You may consider to accumulate foreign currency investment by means of dual currency investment product DCI or using our multi-currency account MCA, which offers preferential rate to our premier clients. Please scan the QR code below should you need to know more about this product. Do keep in touch with your relationship manager to get our latest investment insight.